Good morning and happy Monday to you. We opened gap down for the equity markets here in India, and this is a continuation of the selling that started last week after the Fed announced around midweek that it would be advancing its target for interest rate hikes, or rather it expects that there will be two interest rate hikes at the end of 2023, and this was earlier than a lot of people had expected. And that's understandably led to a little bit of shifting in terms of the expectations for the equity markets, which have rallied significantly. So there is quite a bit of selling pressure across the board. Let's take a closer look as to how we've started the day today. Like I mentioned, Nifty 50 opened gap down at 15,525. The previous close was 15,683. We traded as low as 15,505 and have since recovered ground. In fact, we are now currently above the 15,600 mark. But this is still a far cry, about 300 points off the all-time highs that were hit not too long back of 15,900 or thereabouts. About 15 advances for the Nifty 50. NTPC, Adani Ports making ground once again after losing a significant amount of ground over the last few sessions, up about 2%. Hindustan Unilever up about 1%. There are a few others, but not really too much to speak about in terms of the gainers. Among the losers, you have the likes of UPL, Wipro, Tata Motors all losing ground. UPL, the biggest loser, down about 3.6%. And then you have the likes of L&T, Hindalco, M&M, ICICI Bank, SBI. So more or less selling across the board. The broader markets are actually in fact doing better than the benchmark indices at this juncture, but really there is a huge spike in India VIX. It had fallen below 15 just last week, or in fact it had stayed below 15 last week, having fallen below that mark, and it is now at 15.85, which is a significant increase in volatility. At this juncture, the small cap index defending the green, but the mid cap index down about 0.25% or so at this juncture. Among the sectoral indices, you have the FMCG index, you have the media index and the realty index that are trading in the green. The media index up about 1%, and the realty index about 0.6% in the green right now. All of the other sectoral indices are trading in the red. Not huge cuts, I might add. Nifty IT is trading with cuts of about 0.8%, while the Nifty Bank is trading with cuts of about 0.7% at this juncture. Overall, the market breadth is clearly in favor of, or rather was clearly in favor of the declines earlier in the session. Right now, it's more or less even Stevens for the broader markets. A couple of names that I want to mention from the broader markets then. Bandhan Bank is up significantly after Assam approved a grant of 8,500 crore rupees to bail out small borrowers in the state. You have PNB Housing that is reacting to a move by the Securities and Exchange Board of India to review parts of the deal that was struck with investors led by private equity firm Carlyle. And you have Centrum as well, that is soaring in trade on account of the RBI's in-principle approval to set up a small finance bank after its bid for Punjab and Maharashtra Cooperative Bank. So yes, those are a few names. Of course, the broader theme is that there is consolidation. Consolidation is likely to continue for a short while, and that is all based on the overarching theme that you're seeing across equity markets across the globe. It's not just something that you're seeing here in